Hi, everybody. Welcome to this edition of Kuvera Insights. Um, we have today one of the most reputed folks in the fund management industry, Mr. Jinesh Gopani. Uh,
Hi
Jinesh is the
guys.
head of equity at Axis AMC. Uh, he joined Axis in 2009 as equity fund manager and is now the head of equity since 2016. He currently manages the flagship Axis long-term equity fund amongst other funds. Prior to Axis, Jinesh was associated with Birla AMC as portfolio manager, where he was responsible for alternate assets across growth, value, and dividend baskets. He was also associated with Voyager India Capital as a senior research analyst, where he covered BFSI and infrastructure, and also held a sectoral portfolio manager role for investing. Uh, Jinesh holds a master's degree in finance from University of Mumbai, and basically he has been in the money management industry since 2007. Very warm welcome, Jinesh, and thank you so much for joining us today.
Pleasure is mine.
So, getting straight into our uh, subject matter for discussion. Uh, so, we it seems like we are now nearing the end of COVID, and I say this with a lot of trepidation, but hopefully, uh, this is the last leg, and we should be out of it completely very soon. Uh, so, looking back, what do you think has been the impact of COVID on the Indian economy, and consequently, what has the impact been on the markets?
So I think last 2 years, if you really see the way there has been sort of a lockdowns and then recovery, I think thanks to Indian resilience, Indian people resilience, I think frankly we also never thought that economy will come back to pre-COVID levels so quickly. So after COVID wave of one, where there was a lockdown and the way then economy resurgence happened was phenomenal. So I think the resilience of Indian people, the ability of businesses to come on stream very quickly, I think has really helped. Also, along with that, the kind of money flow which was coming into India, that has really helped many businesses to stay alive. So from the large caps and to the smallest of the small cap companies have been able to raise capital, which has further helped the companies stay on board, and hence there were no major job losses. So I think the beauty of this entire 2 years of COVID, where the expectation was that job losses would be huge, I think we have seen, in fact, improvement in employment generation, especially in the sectors like technology, and now you are seeing that momentum proliferating into other sectors of the economy. So I think very compelling that the Indian citizen and the Indian economy is able to withstand this shock despite not getting big stimulus packages as well, like what we saw in the developed world. So it's a remarkable recovery, I would say.
So, basically, what you're saying is we have sort of brushed off uh, the entire COVID period, and from a market standpoint and from the economic standpoint, this is really behind us in the true sense.
Hopefully, if there is no fourth wave, fifth wave, and there are no lockdowns, then I think we have crossed the hump. Now the momentum has to be kept alive, and that would be done by government in terms of KPIX programs, which will continue. And if that continues, then as you have heard from the finance minister also, the GDP growth rate of 8.2, 8.3% for next year, FY23, we need that momentum continuing so that that economy really bounces back pretty nicely, even above pre-COVID levels, and then sustains that growth for longer period of time.
Right. So, talking about the government, interestingly, we have just heard the budget speech. In fact, the parliament is in session, budget session right now. Uh, so obviously, the budget did the budget and the economic survey together. They put out some aggressive growth numbers, and with a sort of very low inflation. on a projected basis. So, given where we stand today, and given sort of the supply bottlenecks that we are seeing globally, and it is reflected in sort of specifically in some of the leading sectors such as auto and especially uh, transportation. Do you think these numbers are realistic, and uh, can we sort of get there uh, realistically?
See, I think if you really go back in last year, the inflation has caught up very significantly because the demand momentum was strong. There was pent up demand and supply chain bottlenecks were at its peak. Now, when we are talking to many companies, they all are feeling that the commodity prices should ease, the pressure should ease now, because from here on, if it would be difficult to keep on increasing the prices at the consumer level, because there will be a demand destruction which can come into play if prices are increased beyond a point. So I think it is in a way sort of a virtuous cycle, that lot of inflation leads to demand destruction, and then demand destruction leads to some correction in the base prices of chemicals, base prices of metals, which hopefully help us to reduce the inflationary impact. So, come next half, mean second half of this calendar year, you might see a benign inflation environment, because the base itself would be very very high. However, the caveat is uh, uh, how the oil prices behave, because we are largest importer of oil and oil has been boiling. I think at this juncture, government still has some, I would say, policy measures in place to ensure that the inflation doesn't go out of whack, especially during the election season, where you have two big state elections already in the move. And for example, if I may say, let's say oil goes to $100, which is like now today it is 92, so it is just $8 away. If it goes, uh, can government, let's say, for some temporary period of time, reduce the petrol and diesel prices in the domestic market by 10-20 rupees to cushion that inflation? They can, because if you really see, they have created counter cyclical buffers in the way of excise duty, so there is a possibility they can manage it. However, let's say if things go really out of whack, and again there are huge supply chain disruptions, then there will be a problem. In fact, if you really look at Baltic Dry Index, it has collapsed significantly from its highs, which shows that the movement of trade is now resuming normal, unless there is a Russia-Ukraine war or something like that. So I don't. I mean, I would say maybe we should not go by that number of 2-3% inflation, but I think 4 to 5 is what RBI would be looking at, and that is, I think, achievable in some sense.
Understood. Understood. So, effectively, barring so global unrest, some of the sort of news flow that is of concern currently is on the Russia and the China front as well. Barring that, energy prices remaining stable and trending downwards. Uh, you think these numbers are reasonable to assume with a certain uptick for the inflation front?
Correct. So we have to see next 2-3 months how it goes. When some experts are telling that if this Russia-Ukraine thing gets resolved, then oil can correct by 10 to $15 very quickly. So tough to say, I would say, but let's see. Let's hope that things are better.
Uh, in in terms of public finances, and since we are talking budget and the economy, there are some aggressive infra spend announcements, and we have seen some great execution also across, especially on the highways, road transport side. Uh, but infrastructure spending requires huge truckloads of money. So where is this money going to come from?
So I think, Neelabh, if you really go in the fine print, the initial euphoria of KPIX Bazooka, KPIX Festival, and when that announcement came, if you really drill down, then I think the KPIX growth on balance sheet and off balance sheet taken together is just 10 to 11%. So I don't think it's a massive infra sprint. It is a business as usual, and within the constraint, whatever they can do, I think they are doing it. So, and also on the other side, if you see, the estimates for revenue are not very aggressive. So there are chances they might be in a position to outsmart that if economy grows at, let's say, 7-8% real GDP. So I think I would say from a number point of view, it is not very aggressive estimate if you really drill down. So can be manageable, I would say. Maybe 50,000 crores, 1 lakh crores deficit here and there, but doesn't look like a very I mean, when you look at the capex growth from the on balance sheet, off balance sheet point of view, then it is 10-11%, which is manageable, right? We given the revenue growth of 10-11%.
Right, right. No, so understood that is a point which is well taken, and infrastructure remains to be a key focus area, which is important currently.
I think important would be if private capex come into play. That would be a major kicker for the economy. So I think what we understand is government is expecting now private capex to pick up in next 6 to 8 months time. Once this COVID thing really goes away, and then some of the large enterprises start looking at bigger projects. So be it power, be it steel, be it cement, or be it sugar or something like that. The big heavy, you will see some ball rolling if momentum is continued. See, we have to understand we are largely a domestic consumption driven economy. While we are focusing on exports, but we have to keep the momentum going at the domestic side. So if that continues and if there is no major skirmishes, then I think private capex would be filling gap for those big capex requirements, and hence the burden on government might come down.
Correct. Do you think there is a role to play for international funding, international debt financing?
I think they have spoken about some green bonds. I don't think they. I'm not. I would say I'm not aware whether they will be raising globally or domestically, but there is huge demand for green paper, and if government is really looking at going abroad, then I think they can raise pretty quickly. But I don't know, frankly, whether they are raising it in India or they are raising abroad.
Right. No, I mean, you rightly said the devil is in the details, and I guess we'll see that playing out very soon.
Yeah.
In terms of, there were some announcements. So, I mean, I'll make it a general question so that this is something which remains relevant. Around GST, around the relationship between the center and the state government in terms of public finances, in terms of spending at the state level. How have you seen the relationship evolve, this equation evolve, and what is the direction we are headed to now?
If you see the one big announcement they did, that they would like to give, let's say, kind of an interest-free loan to states to the tune of 1 lakh crore for facilitating the infrastructure projects. So I think that speaks of, I would say, urgency, as well as understanding from the center that lot depends on state to keep the capex going, because land is a state subject, right? So any project which has to come on ground will require huge blocks of land, and if state doesn't have money, or if there is no grant, then it might become a bit difficult to get those land parcels. So I think it's a good move. How they devolve that, how much they devolve to each and every state remains to be seen. But I think intent is that they have realized that we have to partner with states and keep this ball rolling. Otherwise, the KPIX program might get slowed down.